The gentleman from Kentucky, Mr. Barr, is recognized for 5 minutes.
Thank you, Madam Chairwoman. And the title of today's hearing is revealing. The title is "The End of Affordable Housing, a Review of the Trump Administration's Plans to Change Housing Finance in America." Well, this suggests that my friends on the other side of the aisle believe that any effort by the administration to reform housing finance will increase housing prices and disadvantage low and middle income borrowers. In reality, the proposals set forth by the administration lay the groundwork to protect taxpayers, retain the 30-year mortgage, improve efficiencies in the mortgage market, and lower prices for qualified borrowers. By pushing back against common-sense reforms to housing finance, the Democrats are endangering the very low and middle-income citizens they claim they want to protect. Unreformed GSEs will lure Americans to buy homes beyond their means and then default with foreclosure as the result. That's not helping low-income Americans at all. We've seen this train wreck before. Democrats' opposition to meaningful housing finance reform will take us right back to where we were prior to the financial crisis. For years, the government's policy was to drive up mortgage indebtedness above what the market could naturally sustain. For example, let's rewind the tape. Back in 2003, this committee held a hearing on ways to improve regulatory oversight of the GSEs. And during that hearing, then-ranking member Barney Frank said this: "I think it's clear that Fannie and Freddie are sufficiently secure so they are in no great danger." He continued, quote, "Fannie Mae and Freddie Mac do very good work, and they are not endangering the fiscal health of this country," unquote. Well, how wrong he was. Let's not let this conversation about housing finance reform end the same way. It is alarming that the enterprise's shares of low down payment and high debt-to-income mortgages are now higher than before the financial crisis. But I would suggest that what is even more alarming is that the Democrat majority today is defending this state of affairs. Winston Churchill said, "Those who fail to learn from history are condemned to repeat it." The administration's proposals seek to place our housing finance system on a stable, sustainable path and protect us from another housing crisis, and I applaud our panel for their leadership. Now, my first question I want to ask, it relates to the credit risk transfer issue to Secretary Mnuchin. The Treasury report calls on the GSEs to continue to engage in a diverse mix of economically sensible credit risk transfers, including by increasing reliance on institution-level capital. Unfortunately, current capital rules hinder banks' willingness to take on more credit risk from the GSEs. Bank capital rules based on Basel III's simplified structured finance approach are grossly misaligned with GSE credit risk. The SSFA was intended to cover all lending, including unsecured debt, as Basel III was trying to make sure that banks are not making unsecured subprime loans. However, the enterprises make secured prime loans, and thus capital charges can be as high as 5 times what banks expect to lose in the worst of recessions. With capital charges like that, it does not often make economic sense for banks to take on more risk from the GSEs despite their desire to do so. Secretary Mnuchin, do you agree that international capital rules adversely affect our private banks' willingness to take on credit risk from the GSEs, and will you commit to working with the bank regulators on FSOC to explore ways to better tailor capital rules so that the private sector may assume more credit risk from the taxpayers?
Yes and yes.
Thank you. Secretary Carson, PMI. Private mortgage insurance can help borrowers with small down payments and help them prudently get into houses and stay there without putting the taxpayers at risk. What role does your plan contemplate shifting some of the risk from the FHA to private mortgage insurers?
Well, we very much want private mortgage insurers to become a significant part, particularly after the GSEs exit conservatorship. And particularly in smaller communities and in rural communities, they can play a very substantial role. And we're looking at ways to make it even easier for them.
Well, I appreciate that. I think PMI is a good solution for both affordability and for protecting the taxpayer. Finally, Director Calabria, private label securitization. What is the, in your mind, the ideal proportion of mortgages held by GSEs and FHA versus portfolio lending and private label?
Well, I do think we need to see more diverse sources of capital. At least when I studied economics, I learned that duopolies and monopolies were not good for consumers, and thinking bringing more competition to this is critical. So I don't want to say an exact percentage, but I think there needs to be a wide range of sources of capital.
I think level the playing field on regulations to encourage more portfolio lending and more private securitization is the right way to go, and I applaud you for moving in that direction.
Absolutely.
I yield back.